that you may have had?
No, you answered all of the questions in your video. Once I rewatched it, I got everything I needed.
Perfect, perfect. Let's see, I'm gonna move on to the next person. Mr. David, how you felt? How was your day today?
I felt good. I kind of felt like I kind of rushed my homework, mainly because I had my in-law in town and just recently got back home.
No problem. Well, good thing you got your work done, man.
Yeah.
So we have the fake out. All right, have a breakout. How do you feel identifying your zones?
I feel pretty comfortable. I mean, I usually just go back to the line chart, try to see because whenever I feel like I can't identify price zone, I just go to the line chart, try to see a clearer view, and then I go back to it. Then I start to see everything clearer, even though it's choppy.
All right, that's good. You're making the adjustments on your own. Just remember, the easiest way to identify a zone, if you're going off the lows, right? So let's say this is one of the lows you're paying attention to. All you have to do is look at the previous low. So if this was the low, and then we looked at this low up here, and we'd be able to draw two horizontal lines where we can shade that in with a rectangle, right?
Right.
If I'm looking at the highs, right, I can see that this was one of the highs, and this is another high, and I can go off those zones there. You see?
Yeah.
But overall, good job. I'm loving the downtrend. Let's see. You didn't identify? Oh, you did. No, the uptrend is a support. Remember, we're looking at the bottom of the trend for an uptrend. So if let's say this was the uptrend we were looking at, then your line should be at the bottom, not at the top.
My bad.
No, you're good. Don't worry. It's a common mistake. I make it sometimes. But overall, good job on this. Continue improving and continue applying, right? Here's something else that I would love for you to identify, right? This is the break. Excuse me. This is the break into the zone, right? And this was the retest. No, and this is the continuation to the downside. All right.
Yes, I see.
Overall, great job on that.
Thank you.
Let's see. My man Hemi, what's up, bro? Let's see. Mr. Paul, where's Mr. Paul at? Talk to me, bro. How was your day?
It was busy, running around everywhere.
Yeah, I hear you, man. I hear you. Let's see here.
Non-stop, man, non-stop.
Remember, I wanted you to identify your zones, bro. So try it on the next homework, right? Go off your zone. So if I see the high, right, I'll help you out with this one right here. If this was my high right here, and this is my previous high, then I should have been able to identify a zone in between both those highs there and drag it across. Okay. If this was my low, right, and this was my previous low, then I could have been able to draw a zone along here and drag that across there. One of the questions a lot of people ask me when they do their homework, and I'll answer that here as well, is when identifying a zone, does the width of the zone matter? Yes and no, okay? Yes, because I want you guys working on identifying fine areas of interest, right? So those supply and demand zones, if I make it where I'm just drawing a big box here, am I paying attention to what's occurring inside, or am I focusing on the rejection of those zones?
Okay.
Well, support, all right, breakout, retest. Yep. Good job there. Just look at everyone else's homework. For instance, someone who did a good job on their homework, Jose Gonzalez, right? You see here, he had his zones, right? Supply zone, demand zone. In between, he had a few other zones. He had the breakout, the retest, right? Try to model how he did his homework here.
Gotcha.
But overall, good job, man.
All right, thanks.
Let's see. My man Hemi, what's up, bro? Talk to me.
Hey, brother.
You
How's
back
things,
home?
man? Yeah, I'm home. I'm a bit crook at the moment, so I'm watching it on the iPad.
Nah, you good, brother.
Yeah.
How's the baby?
Good, man. He's good.
Growing, huh?
Yeah. Getting big, brother. He's getting big.
How did you feel doing the homework? Although I know you
Good, man. Good.
you have a good understanding.
It's always good to have a refresh and do stuff. So good.
Perfect. Just I want to introduce you to everybody. I know I kind of introduced you last time. Hemi's one of my students from Australia, guys. He was actually one of the very first students to join the academy, and he's had his fair share of success in the markets since learning with True Profit Academy. I mean, I don't know if you want to share any of the experiences or what you walked away with the most
Oh man, I just what we're doing now. Just as simple as grasping this here, it fully changed my trading. Going from a break-even trader to, a good trader, a profitable, very, very profitable trader. So if you guys can just get a good understanding of the channels, breakouts and fakeouts, and then once Jose starts touching on the Wyckoff, it's basically a ATM machine.
100%. I don't know if you want to share with them probably one of your most successful trades that you've been able to obtain.
Of late, it's probably this one here, actually, man. I was long from about 1300 area, around there, around that breakout, there.
Yeah, so you caught it. You caught it from here to the upside, right?
Yeah, right up to 1500.
Yeah, that's about, was that 2,000 pips?
Yeah, man, it was a good solid trade, and that was just like you can get quite caught up on the lower time frames when doing this, whereas if you do it on the higher, there's a lot less noise that you can get caught out with. So
100%. So for those of you guys, to translate this trade from here, he said from 1,300 to 1,500, right around here. In this upward movement, if you had taken that trade on a 1 cent lot, you would have walked away with $200, right?
If you zoom out there, if you zoom out and look left, those zones that I've done there are real key roles or real key points. So I don't know if you're able to.
Right here, yep.
All the way left.
Let's see here.
I don't think.
No, it doesn't let us.
Maybe if you pull up the first link I put in, because that was just the link to the chart. See if that works.
Let me see if I can. No, it doesn't let me.
That first one. See how there's 2 links I've put up?
Let's see. Where's it at? No, it's private. Make it public and I'll be able to see it.
Okay. I'm in bed now. So anyway, yeah, that's.
But yeah, so to give them perspective, if I would have taken this trade on a standard lot from 1,300 to 1,500, I would have walked away with almost $20,000. On a 10-cent lot, I would have walked away with $2,000, and on a penny, it would have been about $200. And that's a trade that he took around in the summer, in June, and he closed it about August or so. So just to kind of,
I think I took about 6K on that one.
Perfect. Good job, bro. But overall, your homework looks good. Great job on identifying the stuff. I mean, as always, just focus on those refined areas, right? Anytime, even though you have the zones marked up, don't be afraid to adjust them in favor to matching with what the market is currently doing as well. Or as we've previously suggested, just go ahead and identify those areas of interest with a different shade to remind you what that represents. But good job on this one.
Thanks, man.
Let's see here. Where's my man? Where's Furman at? Furman, how you doing? Talk to me. How you felt doing your homework?
Good. It's been a good refresher. And just took my time doing it. And
Was there any questions you had in regards to it? Because it looks very good, bro. It looks 1,000 times better than what you were submitting in the past.
yeah, I had to actually rewatch the video a couple of times, so be able to grasp everything, and then just took my time little by little.
Perfect. Just keep working hard on this, all right? Remember, as you refresh yourself and you continue learning, right? Just be aware of what we're focusing on. So when we are taking trades, right, as the market is developing itself from the past information, I can digest that into a potential trade or not. But good job overall. Your zones look good. The identification of the channels, the fake outs, really good. Demand zone, uptrend, downtrend, really good. Proud of you, man. Let's see.
Thank you.
Mr. Brad, where you at, man?
I'm here. I guess I didn't go slowly through it. I kind of sped through mine. So there's a few things I already caught that I wasn't happy with, but
You good,
it
my
works.
man. As long as you're identifying the mistakes. But overall, before I ask you about your homework, how's everything at home?
The basement flooded tonight, so that was fun.
Oh shit. How's the weather up there?
We're about to get 24 to 30 inches of snow.
Holy shit. Damn, man, it's happening too fast. It was just summertime.
Yeah, and we got a lot of stuff out in the fields yet. So we farm for a living. So we got a lot I should be doing yet.
If you don't mind, share, where you're from and what do you do?
Yeah, North Dakota, we farm crops. So we have wheats, corn, soybeans, pinto beans. So about 3,800, 4,000 acres of row crops.
Yeah, man. But overall, I'm glad that the family's doing well, and I hope that you guys can fix that flooding problem. When I was living in a basement in New York, man, that shit always happened to us. So I know it's a nightmare.
Yeah, we just had a sump pump go out, so it's been fixed.
Perfect. Let me see here. So yeah, you identified you made the mistake on the middle zone overall, but just remember, like, if I'm going off the lows of the zones here, right? If this was the low I was paying attention to, I would have just dragged my zone from low to the previous low up here.
Got it. Okay.
Which would allow me to identify that area. But overall,
what are we calling that? Supply zone? I see some people call it the demand zone. I don't know if we had a.
Yeah, remember, supply or demand depends on which side the market is on. So if the market is above the zone, then it becomes a demand. If it's below the zone, it becomes a supply.
So
kind of serves as that support and resistance, depending on what side the market is on.
Okay.
But good job, man. Let's see. Who's next? Mr. Daniels, where you at?
Right here.
Hey, Joel.
How you doing, Miss Sharon?
I'm good.
How was your vacation to New York? Hello? Say it again. You're cutting in and out.
I had an awesome time.
It's good to go back home, but when you don't live there, right?
That's why I sent you that video. I was like, wow, how we have changed and grown.
That's funny. I'm going to share that with the group. Let me see. Where's it at? You had your new number. What is it? 5. This one right here, right? Yeah, she sent me a video. She sent me a video of where I met them at my old job.
Grown, man. How we have grown.
Wait, is that on Cypress?
Yeah, man. So
Yeah, man. That's stopping grounds for me, man.
yeah, man. So
Right
uh,
there, right
I
there
met
in Brooklyn.
Mr. Yeah, bro. That I met Mr. and Mrs. Daniels there. They were one of the clients there, and fast forward, here we are. I'm teaching them how I was able to escape that 9 to 5 life with trading.
Yep.
That's
Oh
beautiful.
wow, that's amazing.
Yep.
That's amazing. That's cool, man. That's
But
very good.
before I lose track of thought here, your zones, I'm proud of you guys. You guys are improving so much. I'm loving it. Why don't you guys tell me in regards to how you felt doing the chart?
I felt pretty good doing this. I was kind of independent on this one.
Hey, that's what I want you to do. I don't want you
Yeah.
getting help from Chris anymore. I want you both turning in homework separately.
Ah. So I felt pretty good. I felt like I got lost at one point because I couldn't find like fake out on a retest. But then I like stepped away and then I went back to the chart and looked again and I moved some things around and then I found, which I think I found some good spots in there.
That's a perfect example of a fake out. You see how the market attempted to go up and then it couldn't. So then
Mm-hmm.
market came back in, retested the zone, and then dropped.
Yes.
Perfect example. Another example is here, right?
Okay.
Another example is, had you identified this zone here?
I looked at that too. I did look at that.
But overall, looks good. Looks really good.
Awesome.
Continue putting in the work. It's all gonna be worth it.
All righty.
But overall, great job, guys. Let's see. Where is Mr. Daniel? Daniel, I saw you turned in your homework. Why don't you introduce yourself real quick, Daniel? Let them know where you're from, and Dan is also one of the first students I've had in True Profit Academy.
Hi, Jose, everyone. I'm Daniel here, from New Zealand, Auckland, and yeah, I've just been trading for a little bit, but it's always good just to get back to the basics. I guess been in and out for a little while, but yeah, just come back to gain some more knowledge.
100%, bro. Overall, your chart looks great, man. Looks way better than what you were doing before in the previous 2-week program.
Yeah, totally.
Overall, how did you feel when you were analyzing this chart?
Oh, I felt good, eh? I've been looking at it for a little bit, so I was kind of familiar with it, but yeah, it's just good to look at it, you know, in a bit more finer detail as well sometimes, which when you're kind of short for time, you can get a bit sloppy at times, so it's good to just get back to the basics.
100%, man. The only thing I would advise you, bro, before I lose this train of thought too, and excuse me for interrupting you, is just remember, when you identify your supply and demand zones, always try to find the middle zone that serves as that supply or demand in between. So, for instance, if we went with this low here, right, we can see that there was a zone that formed right around here. Excuse how crooked that came out. And you can see where the market broke above and retested, and when it broke below and it's retesting.
Yeah, cool. Yeah.
But overall, great job, man. Great job.
That's exactly what I'm talking about, you see. Thanks, bro.
Got it, man. Let's see. Who else didn't we review? Jose Gonzalez. Good job today, bro. Good shit.
Thanks, man.
How are you feeling, bro? I mean, I know you've been with me for a while, and you're progressing daily. But how did you feel doing this chart here?
Not bad at all, actually. Just first time I look at that pair. I didn't look at that pair, I don't think, ever. But you know, zones are zones. And I think I've gotten a little better with the zones and identifying the zones and whatnot. So I didn't feel bad at all. There might be one or two things where I just need to refine, but overall, pretty good.
Perfect. I don't know if everyone saw, but today Jose Gonzalez was able to make about like $220 in the market. You know, and those are just results from him constantly putting in the work. based off the price that you had sent this chart in, and the market is at 63. So it's actually above, slightly above your zone right now. So as you can see from, from previous classes, that's actually the fifth wave the market is making before she should see a correction to the downside. But overall, good job on this, man. I don't think there's anything I should correct you on here. Other than the only thing I would say is just always focus on identifying that median zone. Although you have the two lines here, just shade it in so you don't lose sight of that, because you can see how when the market failed to break above this price here or below that price, when the market wicked here, it actually started the uptrend that it started forming here.
True.
But
I also see the little fake out there on the trend, the previous trend.
Yeah, and that engulfing candle confirmed that the market was going up.
Yeah.
But overall, good shit, man.
Thanks.
Let's see who we have next. So I went over David, Daniel, Brad. Went over Hemi, Furman, Mr. Daniels, Paul. Where's my man Randy at? What's up, Randy?
What's up, man? How are you?
Doing well, doing well. How are you feeling?
Good, man. Feel all right. It's first time, second time analyzing this, so hopefully this one will. I sent one in the group chat in the homework one. This is the one I sent you in the morning.
All right, let me look at the one you sent in the homework one.
Yeah.
Perfect. As always, remember, good job on identifying the zone. Very clean on that supply zone. As you can see where the market, where the market faked out of here, right? This is where the retest occurred. This was the breakout, the retest, and the continuation. The market consolidated here, came back up one more time, retested the actual zone, and then dropped. The only thing I would tell you is, like I was telling the other students, is just work on identifying your median zone.
Okay.
As you can see here, that zone played a pivotal role in knowing where the market was going in certain directions. Like, for instance, the market broke it, hit the zone, came back, retested, and actually created a newer low before shooting up. So as you can see, it shot up, came down, faked out a little bit, came back up, retested, and then went back to the zone. But
and
overall, go ahead.
Yeah, so the median, exactly, it's just kind of, it works similar to the supply and the demand, right?
Your median zone is your supply and demand. It's just,
okay.
To me, I found it easier to understand where the midpoint in between two zones are, to identify that, because it gives me an area of understanding where the retest can happen, where the travel between one zone to the other. So for instance, if the market was moving down from this zone to this zone, I at least know that the median zone is an important role, maybe before it either goes back up to break and go even lower, or where if that retest did occur right here like it did and the market fails to break the zone, I at least know on its way up, there's somewhere in between there where the market can come back down and retest just like it did here.
Okay, I see. Thank you.
You got it, man. Just think of it as, when I talk trading to people, I think of like, let's say someone in the military, right? And they're in the army or whatnot, and they're traveling to foreign soil, right? And they understand that in between two bases, there's an area where they can, go hide and protect themselves. Try to think of it in a sense where, if I'm traveling from my demand zone to my supply zone, where can I re-enter that trade, or where can I take partial profits and continue going?
Yeah, I see. Makes sense. Thank you. I appreciate that.
You got it, my brother. Where's my man Jeff at?
I just got here. What's going on?
Good job. How'd you feel taking your first sale?
I thought it was pretty good. I felt really good about it, actually.
It's lovely once you start taking in this information and you can actually put it to test, right?
Oh, wait, that's not me.
Did you take this exact trade for a sale? Gold? Hello?
That's not me. That's Jeffrey.
Oh, this is Jeffrey? Oh, shoot. Sorry. Here you are. Euro NZD. Yes.
Yeah, I took that one.
Perfect. And how did you feel identifying this? Overall, your zones look good. The channels look good. The identifications of them look great.
Mm-hmm.
How did you feel?
I felt really good about it. And then I used some of our later lessons. Like towards the end there, I knew what was going to happen. Or at least I had an idea what was going to happen. And I took it just for the heck of it, and it worked out. So it was nice.
Perfect. I'm glad to hear that. Overall, the only thing I will correct from you here is that on this fake out right here of the zone, the actual retest was this right here.
Well, yeah, but that's both, right?
Mm-hmm. Yeah.
You still have that and that. Yeah.
Correct.
Mhm.
Now, if I'm looking at this retest here, I want to see the market fake out above the zone.
Okay.
That's the only thing I would correct on you. But overall, great job. Like, for instance, this fake out here, this would be the retest, that wick. But overall, great job, man. Congrats on your first trade, by the way.
Thank you.
Let's see, who am I missing? Bianca, can you unmute yourself? How are you feeling?
Here. I'm good. I feel good.
How did you feel doing your chart?
I didn't feel so good doing my chart because I didn't rewatch the video before I did. I did it before I rewatched the video to see what I could do, and then I rewatched it. And I feel a lot better after I rewatched it. But I just wanted to see if I could identify anything.
All right, no problem. So remember, supply and demand, right? Supply. So let's say for instance, I was focusing on my supply zone. So that means my resistance area, right? So the top of the candle. So if I were paying attention to this high here, right, I would draw my box from this high to the previous high. And I would be able to shade that in with a rectangle and be able to identify that as a zone. If I was focusing on my demand zone, right, and I focused on this price to this price because this was the high and this was the low and this was the previous low, then I'll take my zone from there to here. And as you can see, as the market started progressing, that zone was validated. But overall, the zone you drew here for a demand, it is correct. It's just a bit more wider than I would like for you to identify it. I want you to try to work on identifying precision, right? Precision in a sense where you understand where exactly in that zone the market's going to bounce in and out of. So for instance, if I was going from this low to this low, then I could have been able to draw a zone here. And from the upper parts of it, if I took it from this high to this high, I'd be able to draw a zone here, which allows me to see when the market broke above, right? See how the market came back and retested, and now it tried to make a move up, it couldn't, and it came back down.
Right.
But overall, after rewatching the video, is there anything you would change here?
Because what I was doing down here when I was going from this low to this low. So I see what you're saying when I made it too wide.
Yeah, and
the
remember,
breakout is really, and I was doing a breakout of the zone, not necessarily of my support and resistance. So
perfect. No problem. As long as you're recognizing what you're doing, I'm not saying you're wrong here. I don't want you feeling like you're wrong, right? Just understand that our goal is to improve, right? Improve on identifying that and taking things into consideration that we always want to have as refined as possible the identification of the zone so we know where and when to get in or out of those trades, right?
Right.
But overall, the channels look good. The breakout looks good. Just continue working, and I definitely can see you growing with this.
Okay, thank you.
No problem. Let's see, am I missing anybody else? I don't think I'm gonna review Angels just in case, because I know Angel's not here, but Angel overall looks good. The zones and the channels look good. Breakout, correct. Descending channel, downtrend, correct. Demand zone, okay, demand zone. Uptrend. The only thing I would have him work on better is identifying the bottom of that uptrend, but overall I see how he identified those 2 points over here as the touches of the trend, but overall great job on that. Before I move forward, does anybody have any questions or anything in regards to the previous lessons we went over? No problem, Dean. While Dean is eating dinner, let me review his homework as well. Dean, so good job on the zones. The channel looks good. The resistance zone, support zone, yep. It looks really good. The breakout, yep. Breakout and fake out, yep. Good job on that. Looks good, man. Very, 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 very clean. I like it. Just try to remember, we want to also identify the uptrend, downtrend, and the retest of those breakouts and fake outs. But overall, let me see. Does anybody else have any questions in regards to what we reviewed? Let's see, Jacqueline.
Yes.
After seeing everyone's homework, does it help you get clearer insight as well as how seeing what they're doing and the insight I'm giving them?
Oh, yes, especially just for my median. Yeah, definitely.
Just remember, like the median zone, I don't want you guys thinking like it's a whole other term. It's still a supply or a demand zone. Just like, for instance, in David's homework here, right? He identified a supply and demand right here. So he has supply and demand, and then the zone in between helped him understand where before the market reached that demand zone from the supply area, how prior to that, when the market was trying to maintain price above that zone, it actually came back down, retested that zone, right, twice, and then attempted to break out one more time, couldn't do it, and then made its move to the demand zone. So that median zone in between both zones, I just want you guys getting used to identifying that, because I can tell you it has helped me clear up a lot of the mistakes I've made in the past. Like, for instance, if I'm taking a buy and the market cannot break, let's say, for instance, the market was unable to break the zone, right? I can simply re-enter that buy and just ride it back up to the previous supply zone. So that really helped me out, and I want you guys practicing that as well. But in the meantime, let's move on to our next lesson. So our lesson today is going to be about market structure. So we learned about what a channel is. We learned that we have a horizontal channel, right? We learned that we have an ascending channel, right? The ascending channel being when we identify the uptrend, we just simply find the resistance of that uptrend, converting that into an ascending channel. We learned what a descending channel is, right? We've learned the difference between support and resistance and supply and demand, right? We've learned that support and resistance, we're using a horizontal line to identify the price point, right? And supply and demand, we're using a rectangle based off the highs or the lows to identify the price area. We also learned about breakouts and fakeouts, that when the market breaks out of a price or a price area, right? That once the market comes and retests that price and breaks the previous high, we have a confirmed breakout, right? Once we have the market failing to break above that price or that zone and it comes back and retests that price, right? Then we have a fake out. So in this case right here, we had a fake out to the upside. The market broke back into that price or the price zone, and that gave us a fake out. So for today, can you give me some water? For today, we're going to learn how we can identify when the market shifts from an uptrend or an ascending channel to a downtrend or descending channel. okay? So the way we're gonna do it is, before we get into that, let's review the rules of a trend, right? So we identified an uptrend, right? And we understand that 2 touches to that trend is the start of the trend, right? So 2 touches is the start. On the 3rd touch, that confirms it. And on the 4th touch, the market tends to decide which direction the market is going. So if the market breaks that trend and retests that trend, or the price area of that trend, right? Then we understand that we have a breakout. So for instance, let me pull up my slides here. If we look at this diagram here I have for you guys, right? So this is an example of when the market shifts from an uptrend to a downtrend. So again, I'm going to review, right? 2 touches is the start of a trend. The 3rd touch confirms it. And on the 4th time the market reaches that trend, we can see here that on the 4th time the market attempted to reach that trend, it actually broke the trend. And the conversion from an uptrend to a downtrend began when the market came back up and retested the 3rd touch of the trend.
You're still on the whiteboard, by the way.
Oh my God. Thank you, Jeff. So again, we have 2 touches here, right? 2 touches starting the uptrend. On the 3rd touch, we can see that it's identified with higher lows. So you guys remember, higher in price, but the lowest point of that candle. So here we have 3 circles identifying the touches to that trend, right? And what I did was on each touch of the trend, I just identified the support of that trend, right? Going off the lowest price that the market saw in that trend. So as we can see here, right? Higher low, higher in price, lowest point of the candle, right? Each touch, we identified the support. Once the market broke out after creating a higher high, right? The market broke out of the trend, consolidated a little bit, and then retested the support, which is now a resistance area of the last touch of the trend. We now have 2 touches to the downtrend, confirming that this is the start of a downtrend, right? So this is what the market structure looks like. So when we go on to say, okay, the market is trending upwards, and as I understand that, as the market has finally broke the trend, in order for me to understand if the market's going to continue going up or down, right? I understand that in order for it to go down, I need the market to respect the last touch of the trend before the breakout. So we can see here that when the market broke the trend, this is considered the breakout. And what confirms the breakout is the retest of the last highest low point of that uptrend. Type 1 if you guys understand that. Type 0 if you're confused. Perfect. So as everyone's typing 1 or 0, I want to give you guys this thing to write down, right? The important thing after identifying our price areas or price points, right? Support or resistance or supply and demand, is always important to understand the structure that the market had set prior to the move it's making now. So if we tie into the 3 questions I told you guys in the beginning, right? What happened in the past, what is happening now, and what happens after, right? When we ask ourselves the first question, we understand that the market was previously trending upwards. So let's say that none of the consolidation occurred and the retest hasn't occurred. So now we have the breakout. So once we understand what's happening now, after understanding that the market was trending upwards, once we have the breakout or the break of structure, all we have to do is simply wait for the retest of the last highest low point to understand that we're now in a downtrend, the start of a downtrend, and we can consider taking this trade for a sell to either the previous highest low or the first highest low of that previous uptrend. Type 1 if that makes sense. If it doesn't, type 0. Perfect. Awesome. Let's see. Randy, that makes sense to you?
Yeah, I got it.
Perfect. So as we progress, right? So again, the market was trending upwards. We're going to review that again, right? 3 touches to the trend. On each touch, I just simply identified the support. Once the market created its highest high, so let's say I simply identified this as a channel, and I identified the channel here. Once we had our last highest point, and then the market broke that trend, when the market consolidated and then finally retested the last touch of the trend before the breakout, right? I understand that that's the start of a downtrend and that I can take this trade. If I took the trade from here to here, right? And I understand that because of the fact that this was the previous support before that last touch, right? Or the prior one to that, I have that understanding. Now, let's talk about if the market fails to retest and it breaks above, right? So the important thing is, I'm going to go onto my whiteboard here. If I have an uptrend, and as the market was developing itself, so we had 1 touch, 2 touch, 3 touch, and then the market broke. If I identified this as a support, right, and the market failed to stay below that support and it breaks back in and retests, then I know that there is potential continuation to the upside, right? And the first price area I want to pay attention to, not only just this previous highest high, but the actual highest high the market saw in that previous structure. So if the market retested here, I at least know that if I saw that opportunity and the market showed me in that favor, I can take this trade from this point to this point and then look to see if the market doesn't break above that line, then to see if the market's going to come back down and actually break below and retest and then continue going down. Type 1 if that makes sense. Type 0 if I lost you. Jackie, we'll get into that tomorrow when we talk about candlesticks.
Okay, thank you.
No problem. So again, so if I ignore everything I said here, right, and I go back to what we spoke about yesterday, if this was the last touch of the trend, the last highest low point, right, and I drew my support off of that, I'll answer that for you right now, Furman. Hold on. And the market fakes out of the trend until the market retests that price, either above or below. The market can range above and below as long as there's a clear retest, right? Is it this one? Or is it when the market finally breaks out and retests? There is a potential of the market doing that. Remember, prior to that, the market was trending upwards. So as the market is trending upwards, after it's made its move to the upside, there's potential after the market breaks the trend that we can see some consolidation. And the importance is to see where the market goes after that, right? So what happened before is there was an uptrend. What's currently happening is that the market is consolidating. And what happens after is if the market retests the last touch of the trend, although it faked out a few times, then that's where we can see the market continuing to go down and we have the start of a downtrend. Type 1 if that makes sense. Furman. Let me know where I lost you.
No, I understood that part there. It was just that what you were explaining before. My internet, it's a little, sometimes it says unstable, so I didn't get to hear the first half of what you were saying. But
Yeah.
I understand.
I'll go over it again so you're on the same page with us. So we have the previous uptrend, right? The market was trending upwards, right? And although the market broke below the trend, and let's say this was the support of the last touch of that trend, if the market breaks above and retests that price, there is potential, right? If we're paying attention to the 2 previous higher highs, that the market can go up to those prices. Now, again, If the market breaks above and retests, then there's a sign of continuation. If the market doesn't, right, then we have those understandings. The important thing is that we understand on the last touch of the trend, right, if the market does not break below and hold price below and it breaks above and retest, there is a sign or potential of the market continuing to the upside. The importance is what happens after that retest and if the market breaks above the highest high point of that previous trend. Okay? Does anybody have any questions in regards to that before I move on to a downtrend? If you do, type 0. If you don't, I'll move on. So let's go back to our slides. So the next one is a downtrend, right? So on a downtrend or a descending channel, we're focusing instead of the higher lows like we did on the ascending channel or the uptrend, right? We're focusing on the lower highs. So if I have a downtrend and the market is trending downwards, I'm paying attention to the 3 touches of the trend that confirm that downtrend, right? And when the market finally breaks above that trend and comes back and retests the support, which was the resistance of the last lowest high point, then that would confirm for us with that touch and the previous lowest low point of that trend, or the last lowest low point of that trend, then we have now a the confirmation of an uptrend starting, and we can see that from this price here, the market started to go up. So the same thing goes for if the market were to do this on the downside and it failed to retest, right? So if the market was trending downwards and we had the lower highs, right? What happens if the market breaks above and cannot hold price above the last touch of that trend? Then we know that if the market breaks back in and retests, that there is further room for continuation to the downside. The 2 points we want to pay attention to are the previous 2 lows, and if the market does not break that point, then we want to see if the market does eventually break above and retest and continues going up. Now, remember, I'm going to say it again in regards to the downtrend. If the market was trending downwards, right? Once the market has finished making its move to the downside, right? And the market breaks above, there is potential that on the resistance of that price, the market can consolidate right around that price, which leads us to our next topic. But prior to that, I want to make sure that everybody's on the same page. So if you understand how the market is structured from when the market shifts from an uptrend to a downtrend and a downtrend to an uptrend, type 1. If you don't and have any questions, type 0 so I can answer them. Talk to me, Randy.
So for the downtrend, see how in the uptrend there was a consolidation? Not necessarily would happen on the downtrend to the uptrend. It's more of the confirmation for the retest.
Yeah. So remember, there's always the potential of the market consolidating after the downtrend, which leads us to the next one, the next topic we'll talk about. But I just want you to understand the concept of how the market shifts from a downtrend to an uptrend and an uptrend to a downtrend.
Okay. Gotcha. Thank you.
So real quick, right? Where am I focusing on at the end of a downtrend for the market to retest and confirm us the start of an uptrend?
Would that be the breakout?
The breakout and the retest of what point? The third touch, remember, right? So on the third touch, right, we're identifying the resistance of that touch, right? And when the market breaks above and it retests at that point, that's where we have the start of an uptrend.
Gotcha. Got it. Okay. Got it. Thank you. Appreciate that.
You got it. So before I go on to my next one, let's look at that on a live chart. So let me see here. I got some crazy stuff going on here. So let's say, let's see here. So we have the market trending downward, right? So when the market started trending downward, prior to identifying each touch of the trend, I'm going to shade them in with a box, right? And identify the support of each trend, of each touch of the trend. So here's that example, right? Here's the second touch. Here's the third touch. As we can see here, after the market dropped and consolidated, there was a move to the upside. Now, prior to that, the market never really retested my zone here. So the market came back, retested here, right? Which if I put it all together, let's put together what we've learned. So I'm gonna identify my supply zone, my demand zone, excuse me. So here we have low to low, right? Here we have, I'm gonna go off of, let's say from here to here, right? And my median zone from here to here, which is also the third touch of that downtrend, right? So if I take my trend line tool and I identify my downtrend, right? We have here, excuse me, turn this red so you guys can see it clearly. Here's my third touch. Here we have a fake out right before the break above, right? So we see the fake out here. Prior to that, we have 1, 2, 3, right? Let's say if I would have focused on this price here being my third touch, of the trend, if I identify the resistance of that last touch, I can see here after the consolidation of price, right? See here how the market consolidated. When the market broke above the zone, on the retest here, the market shot up. So this is a perfect example of where the market shifts from a downtrend after consolidation to an uptrend. We had the breakout, the retest, and then continuation to the upside. Type 1 if that makes sense. Let me know if that doesn't make sense. Perfect. And an example of an uptrend shifting to a downtrend would be if I started this from here to here, right? Let's say I make this really tight, but let's go off of where the touches are occurring. This is a tricky one. Let's go here. This being the support of my last touch, we can see that after the market broke below the trend, right? It below retested the trend again, came back, kind of was hopping in and out of the trend until the market retested the last touch of that trend. And we can see how the market came down, broke up, tried to come back up, couldn't, and came down, which was the start of a new trend to the downside. Type 1 if that makes sense. So here's a perfect example of when the market is trending upwards and the market cannot break below the price and hold price there. We can see that after the market consolidated a bit, right, on the last touch of the trend, the market actually broke above and then shot up even higher. And then prior to that, right before the market reached this point and it started to come down right before she went down strong. The retest occurred on the same price where the last touch of that trend happened, and there was the break to the downside hard, came back up. Now it seems to be going down. Type 1 if that makes sense, guys. I want to make sure everybody's on the same page before I move on. Perfect. Let's see. I'm gonna pick someone. Let's see. David, where you at?
Yes.
Do you see how the transition of the trend happens? Now, the importance of us identifying those key levels of supply and demand and making sure that, you know, we're identifying the proper trend to understand where the structure is set, how important that can be.
Yes.
Is there any questions you have in regards to this?
No, not at the moment, at least.
Perfect, perfect. Let's see, Jackie, how you feeling?
I'm feeling good.
Is it making sense?
Yes.
Now remember, when you tie in, when you're asking yourself these three questions, after you identified your zones and your trends, right? It's important to understand the structure of the previous movement to understand what happens next, right? So what has happened before, right? So the market was trending downwards in this sense over here, right? After I understand what happened before, right? The market on the last touch, I identified it and I identified the resistance of that last touch. So although the market consolidated and attempted to break above, we can see here on this example that when the market couldn't hold price above that price of the last touch, the market actually came back down to the previous zone, which was identified based off the lowest low of that trend or the channel, right? So if this was the channel and that was the lowest low and the previous low to that. So if these were the two lows I identified, I was able to understand that that was a zone there and that when the market consolidated and then attempted to take on that price where the area was focusing on, with the last touch of that trend, we see that the market couldn't hold that price and it made a move back down to the zone. Does that make sense?
Mm-hmm. Yes, it does.
Always make sure that when you first start charting anything, the first thing you identify, excuse me, the first thing you want to identify is the zones. Prior to that is the trend, right? Understanding the previous structure, right? And then from there, we start finding confluence. Let me know if that makes sense. I by mistake muted you.
Oh, yes. No, can you repeat that, please?
Yeah, so when I'm asking myself the three questions, right? When I understand what happened before, right? The important thing I want to know is what important supply and demand zones am I focusing on, right? On top of that, I'm identifying the trends. And once I identify the trend of the market in those zones, I understand what the previous structure is. So if the structure was a downtrend, then my job is to see if I'm taking this trade for a buy, where that trend is over and the new trend is starting. And from there, I can take my trade. Let's say, for instance, if I took a buy on the retest of the last touch of that downtrend, then I know I can take my trade to the previous touch of the trend, which the market made a move to the upside and then came back down. You see?
Yes.
So once the market showed me that and the market couldn't break below, I could have re-entered this trade to the upside to the previous touch before that. So you see that? So if I took that trade from here to the previous touch, we can see that the market clipped it above it a little bit and then finally broke below and kept going down.
Yes.
All right, so this is how we start to generate an idea of where and when to take trades. Does that make sense to you?
Yes, it does.
Perfect. Does anybody have any questions in regards to what I said? If you do, type 0. Which zone you want me to identify, Bianca? The bottom one. All right, so if I take my low, right? Let's say I went from this low to the previous low, right? So if I took it from here to here, so we see here low and low, right? Low representing where the market went ahead and, excuse me, let me fix this up a little bit. Where the market hit and then turned, right? The market hit and turned, right? I went ahead and identified this low to this low, which gave me that zone. Now, if I actually fix that up just a slight more and focused on where the price consolidated right above this zone and to where the market was, hold on a second, where the market hit that zone, then I'll have that gray zone that I identified there. Let me know if that's clear to you.
Yes, that makes sense. I was looking at the previous low, not the one right before, but the one before that.
Yeah, so let's say I went from here to here, we would see like that's a pretty big zone to look at, and all the noise inside that zone kind of makes it harder for me to see the clear area. Although when the market broke above, it shot up. I just want you working on refining those areas much better so you can see where the fake out to the downside is occurring. So you see fake out, retest came up, fake out, retest came up. That's what I want you focusing on.
Okay.
Perfect. So let's talk about the areas of consolidation, right? So when the market consolidates on support or resistance. So when the market moves, there's three important phases. And actually, let me show you guys the slides. So there's three important phases of the market moving. So we have what's accumulation, we have distribution, and we have the move to the upside or downside after the accumulation or distribution. Accumulation is when the market consolidates right around support, right? So the way we identify accumulation is when the market is consolidating on support or on an important demand zone, and right before the market shoots up, it fakes out, comes back in, and retests above that zone. That's right here where we see, if you think of cause and effect, what was the cause of this move to the upside? Well, when the market consolidated, right, the reason it consolidated was, if you look right, the market came down, and after the end of its move to the downside, there's something called accumulation that occurs. And what that is where the market tends to accumulate pressure to either the upside or downside. So when we start to look at the market, right, and understand market structure, right, we understand how the market shifted from an uptrend to a downtrend. The important thing is to understand that when the market, before the market, makes its move to the upside or downside, we're identifying those areas of accumulation, which is consolidation at support and distribution at resistance or your supply zone, right? So remember, support or resistance is the price point. Supply and demand is the price area. Type 1 if that makes sense. Type 0 if it doesn't. So again, if I'm looking at my chart here, and I see that where the structure occurred, right? The market started trending downwards, and after the market finished making its move to the downside, the market started to accumulate. So you can see here that right before the market shot up, the market faked out, came back, retested the top of that zone, and then shot up. This is a perfect example of accumulation towards the bottom. So let's say for someone that understood that this whole movement to the side here, right, this is the resistance of the accumulation and this is the support of the accumulation, right? After the market finished making its move, right before the market made its move to the upside, she faked out, came back, retested, and you can see that right above the zone, there was a retest where the market actually confirmed that the structure of the downtrend was over and we're now in an uptrend, which is the cause of this movement to the upside. Type 1 if that makes sense. So when Hemi was talking about earlier about the Wyckoff method, the Wyckoff method is basically when the market makes a move to the downside, after we identify where accumulation is, we wait for when the market breaks above the zone and retests that, which is also the last touch of the previous downtrend, signaling that that downtrend is over and we're now in an uptrend, and we have that move to the upside. So this correction to the downside right before the retest, we call that the jump the creek. I'll get into more details into that so I don't confuse some of you guys. But all this is just a theory that this guy named Wyckoff came up with, that after the market makes a move to the downside, the market consolidates, accumulates, right? Accumulates in this sense, and then breaks above. And when the market retests above that zone, that's the effect to the upside.
I have a question.
Talk to me.
Is that like the last kiss trade as well?
That's the what?
The last kiss.
The last kiss is when it happens on distribution, which is the retest of the breakout of distribution. So,
okay.
Just think about it as like, this is accumulation at support or on your demand zone, right? And this is resistance or your supply zone. And when the market breaks out of that zone, right? Right before she makes her real move, they call it the last kiss before the rally to the downside.
Gotcha.
Right? Type 1 if you guys understand that. Perfect, perfect. Does anybody have any questions? I'm gonna run down the list to see if everybody's on the same page. Bianca, how you feeling?
I'm understanding everything.
Perfect, perfect. Brad? Let's see, Dan? Jackie, how you feeling?
I'm feeling really good. It looks good. Thank you.
Perfect, perfect. David, I know you say you're good. Furman, how you feeling? All right, while we wait for him. Jeff, how you feeling?
Yep, looking good. I got it.
Perfect. Jose?
Good, man. We're good.
Perfect. Kurt, how you feeling, man?
Yeah, good, bro. Really good.
Perfect. Mr. Daniels and Mrs. Daniels?
Feeling good. I just had an epiphany while you were doing the charts a while ago in terms of like marking out your zones.
Mm-hmm.
I realized it today while I was doing the assignment as well, that the candlestick doesn't necessarily have to be the same candlestick to mark your low points.
No, not at all.
High points.
We always want to identify where that resistance is, right? And remember, resistance is where the market hit its ceiling and it started to come down. So if it was a candlestick, right, and this was the highest point of the candlestick, which we will get more detailed about tomorrow, right? And then there was a previous low. Let's say this was the market's last candlestick that created a high, right? Then I can identify from this point to this point my zone.
Mm-hmm. But it doesn't have to be a bullish and a bullish or a bearish and a bearish candlestick.
No, don't complicate yourself like that.
Okay, yeah. Well, that's what I'm saying. I was doing that, but I just realized that I don't have to do that.
No, but the importance is, and as we move further along in the class, I'll clarify that for you. But in the end, if it is a bullish and a bearish candlestick, remember the important thing is, as we learned about in the previous classes about candlesticks, it's important what happens after, right? So if this was a bullish candle and the next candle was a bearish candle, and the body of that candle was bigger than the previous body, then that's an engulfing candle, right?
Mm-hmm.
And if the open and close of those prices occurred on the same price, then that also represents the base or the resistance of the tweezer top.
Mm-hmm.
But we'll get more into that tomorrow, right? Promise.
Okay.
Let's see, Randy, how you feeling, my man? While we wait for Randy, Paul, how you feeling? Let's see.
I'm feeling good, man.
Perfect, perfect. So I'm gonna run through 2 more examples, and then I'm gonna give you guys your homework so you guys can enjoy the rest of your night. So here's the market moving downwards, right? Here's the market moving downwards. And we can see that on the resistance of this price here, on the last touch of the trend, we can see that the market consolidated right above this price here, right? If this was the accumulation area where the market consolidated, we can see how after the market faked out, it broke above, retested. So we have the downtrend, we have the accumulation, and we have the move to the upside after the retest of that last touch and on that price, or the retest of the breakout above the accumulation area. So then the market shot up. Let's look at another example of the market going upwards. Right? We can see here how there was distribution. So here's my zones. Here's the distribution, and that term that David had asked about, right? We can actually say that this is the distribution here. And right when the market retested the last touch of the trend before the breakout, we can see how the market consolidated right above, faked out a few times, came up, but couldn't break the high of this price here. When the market came back and retested, we can see that that term, he said, the last kiss, occurred on the support here, where the market broke out of the distribution, came up one last time, and then started going down, which gave us the start of a new downtrend. So distribution, accumulation, downtrend, uptrend, market structure, right? Uptrend to a downtrend is when the market breaks out of that trend, retests the last price of that trend, and continues going down. Type 1 if you guys are on the same page with me. Perfect, perfect. Awesome. Randy, I don't know if you're still there with us. I was trying to see how you're feeling.
So good.
Awesome. Is there any questions or any clarifications you want me to make?
I got it. Thank you.
No problem. So for today's homework, I want you guys identifying for me, right? And I'll place it in the what do you call it? The chat for the homework. I want you identifying your zones, right? I want you identifying your trends. I want you identifying the change in structure. So how you're gonna identify that is, so we have, yeah, I see that, Furman, thank you. This is the last touch of the trend. So I'm gonna last touch of trend. And this is the break above the trend, right? Break above. This is the retest of the change of structure. You can do it like that. Or the start of an uptrend. You guys can identify for me as well. Outside of the colors that you guys are using for your areas, just identify for me your accumulation price points. So if this is accumulation that you're identifying, right? Let me make this a little darker. Just label that as accumulation. Accumulation, and if it's distribution, I want you identifying both. So here we have the change of a downtrend to an uptrend, and we have an uptrend changing to a downtrend. I want you guys labeling all this, all right? Labeling the change of the trend, your accumulation and distribution. And I want you guys sending this homework to us, all right? Type 1 if you guys understand. Does anybody, before I let everyone go, have any questions or anything? Perfect. So let me submit this to the chat. And I'll upload the recording of today's class. And after that, let me write down here too. Identify change of structure for uptrend to downtrend. Downtrend to uptrend, right? Also identify accumulation. I don't know if I spelled that right. And distribution. And identify the same as we identified before, breakouts and fakeouts. Retested areas of the following breakout and fake out and supply and demand zones. All right. I'll see you guys mañana. Hope each and every one of you have a great evening. For those of you guys on our side of the world, for those of you guys on the other side of the world, hope you have a great day. And I'll see everybody tomorrow. Hope everyone has a great night.
Night, everyone.
Thanks.
Night.
Good night, everyone. Have a good day.
Good night.